Hi CA students, let's revise CFI and AFM Chapter 8 Mutual Funds. Practical question 18. A mutual fund made an issue of 10 lakh units of 10 each on January 1, 2008. No entry load was charged. It made the following investments: 50,000 equity shares of 100 each at 160 for 80 lakhs. Then 7% government securities 8 lakhs, 9% debentures which is unlisted 5 lakhs, 10% debentures listed one 5 lakhs. Total valuing up to 98 lakhs. By here only we can see that 10 lakh multiplied by 10 will be 1 crores. But they have invested only 98 lakhs, so 2 lakh will be in the cash balance. During the year, dividend of 12 lakh was received on equity shares. Interest on all types of debenture securities was received as and when due. So this will be the income on the investment by the mutual fund schemes. At the end of year, equity shares and 10% debentures are quoted at 175 percentage and 90 percentage respectively of face value. So there is a capital appreciation here, and there is a reduction. No, only this capital appreciation is there, and other investments are valued at par. Find out the NAV per unit given the operating expenses paid during the year amounted to 5 lakhs. So this will be an operating expenses which which will reduce our cash balance. Also find out the NAV if the mutual fund has distributed a dividend of 0.8 per unit during the year to the unit holders. So this also will reduce our cash balance. Okay, now this portion of cash balance reduction we will show only when we calculate the NAV at the final stage for the unit holders. It will not affect in the previous cases. Okay, so because this is a separate portion of question, we'll see the solution now. We know that the cash balance in the beginning is 2 lakhs because 10 lakh multiplied by 10 will be 100 lakhs, then minus the investments made for 98 lakh, 2 lakh is the cash balance, and dividend was received for 12 lakh on the equity share, so dividend received will be an inflow which will get added to the cash balance, and the interest we have received on these investments 7% multiplied by 8 lakh, so this is 8 lakh multiplied by 7%, and then 5 lakh multiplied by 9% on debentures, then 5 lakh multiplied by 10% on listed debentures. So this will give us the interest received. This also will again add up to the cash balance. So the total gross receipts of cash balance is 15 lakh 51,000, and as we've seen there is a cash expenses of 5 lakhs. So reducing that, the net cash balance will become 10 lakh 51,000. Now NAV calculation considering only to this extent. So for that the cash balance will be 10 lakh 51,000, and then 7% government debentures are taken at par because they told the other investments to be taken at par 8 lakh, and equity shares are taken at 175 percentage. The face value is 100, so 175 percentage will be 175 rupees. 50,000 units multiplied by 175 will give us 87 lakh 50,000. As we can see, there is a appreciation from 80 lakh to 87 lakh 50,000, and 9 percentage debentures unlisted at cost only we have to take. Yeah, because here they have given equity shares are quoted at 175, and debentures 10% debentures are quoted at 90 percentage. So quoted in signifies that it is listed, and another thing they clearly told it is 10% debentures. So 9% debentures which is unlisted will be recorded at cost 5 lakh, 10% debentures at 90 percentage, so 4 lakh 50,000. Hence the net asset value, total assets net asset value will be 1 crore 15 lakh 51,000. Then the number of units is 10 lakh as they have given. Dividing that will give the NAV per unit. This is the first requirement of the question. First, and this is second. We can keep. So the first requirement NAV, considering the operating expense and the other things, NAV is 11.55. Now the second requirement is also find out the NAV if the mutual fund has distributed a dividend of 0.8 per unit during the year to the unit holders. So 0.8 dividend, which will be 10 lakh units multiplied by 10 multiplied by 0.8. So sorry, no, they have given in rupees, it's not in percentage. So 10 lakh units multiplied by 0.8 will be 8 lakhs. So if it is distributed, then our cash balance will reduce to that extent, because out of 10 lakh 51,000 dividend issued to the unit holders, 8 lakh will get reduced. Hence the new cash balance will be this minus this 2 lakh 51,000 51,000. Now as we can see, the total assets, from the total assets, if we directly reduce 8 lakh, will give us the new net assets of 1 crore 7 lakh 51,000, and the number of units is 10 lakh. Hence 1 crore 7 lakh 51,000 divided by 10 lakh will give us the new NAV 10.75. Thank you.